I'm very much looking forward to this conversation. I feel like I've followed you and enjoyed at least your Twitter self, which I know is not entirely a person, but your Twitter self for a very long time. And then we met at Capital Camp, and we both realized with like incredible excitement that we went to Michigan State at the exact same time. And I think also lived in San Francisco at the exact same time. What years were you in San Francisco?
I was there from 2014 to maybe 2020.
Oh yeah, okay. So we definitely overlapped for a few years in there too.
Yeah. But yeah, that was crazy that we had realized the other week that we went to Michigan State at the same time. We pretty much lived like in the same area and probably passed by each other like every week and did not know each other. And then, a decade later, here we are.
And you studied business too, right?
Yeah. I was a finance major.
Okay, we were probably in some of the same classes, honestly.
Yep,
that's
definitely
wild.
And that's like that. We were talking about it. That's crazy, right? Like the power of Twitter is that you can meet, your people, your tribe, regardless of wherever they're living around the world. Then you meet up in person at an event or wherever it might be, and you like already know each other, and that we didn't have that run in 10 years ago, but we probably would have been friends 10 years ago.
Totally.
And it took a decade for that to be realized, and it came through Twitter, which is pretty phenomenal.
It's amazing. Yeah, I feel like I'm 10 years late in getting to know you, but we're making up for lost time. So I'm looking forward to this. I feel like I have so much to learn from you because you are, we kind of, this is interesting to me because we started in such similar places. We both grew up in Michigan. Where'd you grow up in Michigan?
Rochester.
Okay. Is it a suburb of Detroit, right?
Yeah, like 30 to 40 minutes outside of Detroit.
Okay, yeah, basically same. We went to the same college. We both got into tech, like circa whatever that time frame, and then ended up kind of like dovetailing into totally different directions, but interested in a ton of the same stuff. So I'm excited to get have you teach me everything about multifamily real estate. And I know you are very, very thoughtful about delegation, automation, and like how you guys run your business in an extremely high leverage way. So I'm excited to get into both of those, but I want to start with my favorite opening question, which is who are your heroes?
Yeah, good question. I think for me that I kind of pick characteristics of certain people I like, and that's what I really admire about those people, right? So, there's a really well-known names of people that are changing the world today, but I won't get too much into those. I think my overall heroes, people I look at, and I'm like, I love the body of work of the life that they've created. I love what they're doing in business, in giving back, in growing and raising families and building strong relationships. Is really just the people that are closest to me that I admire, which is, my dad, my brother, and my grandfather, who passed away now. But those are the people really that I admire. My dad had made a lot of sacrifices to help raise me and my brother as kids. Sacrificing certain things through his job and stuff like that, and really just raised, me very well as my brother. My grandfather, was born in a village in India and, wasn't a very good student through a variety of things, ultimately became like the CFO of a company in India. And then my brother, who's about 6.5 years younger than me, has taken risks much earlier on in his life than when I did, when I was just more comfortable, like working a job and stuff, and is a very thoughtful person. And so, those are the kind of people that I truly admire because I see them up close every day, and those are kind of my personal heroes.
I don't think you're behind the curve at all on risk taking. I mean, there's not a lot of people running a real estate firm your size or your age, I wouldn't think. What does your brother do? Is he extra crazy?
Not crazy. He runs this business. It's called Jauhar Academy. Pretty much what he does is like Lambda school for people that want to get into sales. But he just doesn't do it at a venture-backed scale. He does it more on like a one-to-one basis and does the income sharing agreements. So it's super interesting. When he was graduating from Michigan State, he went to, he did all these internships during college to try to go into Wall Street and stuff like that. between his junior and senior year, he came out to San Francisco. It was me, my cousin, and my brother Samir, and we were talking. And my cousin, he's into startups. Now he runs a big podcast. He sold the company and everything like that. And he was like, "What do you want to do?" And my brother's like, "Oh, I want to go to Wall Street, then go into VC and all these things." And he was like, "Why don't you just like go into VC? Like, why are you trying to go about it in this roundabout way?" And so he was like, "Yeah, I guess good point." And so he was like, "All right, well, I've wasted all this time trying to get these like finance jobs and doing these internships. Like, what am I going to do now?" He just applied that same framework of like cold emailing and reaching out to people on Wall Street. He just applied that to tech. And he's like, "I'm not technical. I'll get into sales." So he just did cold outreach to all these people, ultimately connected with somebody at this company called Sif Science, like a Series A at the time, I think, back startup, Series A venture-backed startup, got in there as an SDR, did that kind of sales role. Did it for a couple of years and then realized, like, hey, there's a lot of people like me that don't know how to do this. I should go help those people. And it's amazing what he's been able to do. Like, there's examples of people that have went from making like $40K a year to like $120,000 a year. One of his friends that he got into sales at the time, when he was just working as an SDR, he helped his friend get into the company. After I think 3 or 4 years now, that guy is going to make $1 million this year as an account executive. And my brother really, really cares about the people. Like, coincidentally, when we were at Capital Camp, I was talking with someone and their son, got in through my brother at a company. So yeah, shout out to him. That's what he does. And, people should check that out.
That's super cool. As soon as Lambda School kind of made it big, I don't know if it made it big, but at least became like Twitter mainstream aware. I feel like everyone was just kind of like, "Oh my God, this is so obvious." Like ISAs for sales, ISAs for nurses, ISAs for like all of the sort of obvious high earning careers that you could be trained for relatively quickly. That's not like super credential based. And I'm kind of surprised we didn't see more of those pop up quickly. So it's interesting to hear about that. It's such a cool mechanism. Makes a ton of sense.
Totally. Yeah, it's this whole process of like, learning never stops. It should always keep going, and you can increase
being able to retool careers.
Yeah,
whenever you want. And especially for sales, people don't realize like there's a lot of companies where the salespeople make more than the CEO, at least on a salary basis, equity aside. But like, there's some ridiculous situations out there for really good salespeople.
Yeah, 100%. Sales is the best career to go into if you want some relative safety, but you have like, again, relatively in most cases, uncapped upside. It's amazing.
Yeah. So was that like a little squad, like you and your brother and your cousin, Sean Peary, right?
Yeah. Sean, he lived in San Francisco at the time. I guess kind of still does in the Bay Area. But yeah, it's just family. Like my cousin lived out in San Francisco. I had moved out there to go work at Facebook. And so, yeah, we would hang out from time to time. We have a bunch of family in the Bay Area.
Cool. I listen to his podcast sometimes, and I really like what they do. I got some buddies that used to work for him, and I remember I don't remember the exact quote, but it's something about like real estate is where like not that smart people go to like, get rich or get rich reliably. It was like something like that. Did you guys fight over that? Was that like, did you inspire that quote? Did you?
I love that quote. I think it's so accurate. I think the exact quote is something along the lines of like, the real estate has the highest proportion amount of dumb people getting rich.
Okay. Yeah.
Which is very true. Like, real estate, one of the reasons I got into it, I looked at like what was going on in, a variety of industries. And I said, like, look, real estate it's super simple. It's a hard asset. It's been around for decades. It's not complex. You just have to put in a little bit of, work and get your hands a little bit dirty. But, I met this one guy in Florida who worked for one of my uncles, like running a Domino's store at some point. And this guy had like 40 houses and he barely spoke any English. And this guy was, making this great money, just like buying house after house, renting it out to people. And I think like that is, real estate in some ways is the American dream for people owning cash flowing real estate, because it's so simple, and it's just a very like sustainable type of business. It's been around forever. It's going to continue to be around forever. And I will say like there's a lot of sharks in real estate, especially when you get into the institutional space. So you have to be careful. But that quote I think is probably pretty fair.
Is what attracted you to it after? Because you spent how long in tech, like at high levels of tech? I mean, I think we worked at Facebook for at least a few years.
Yeah. First, I started my career actually after Michigan State at GE. They had these like entry level finance rotational programs. I did that. Then they had some more like accelerated training programs to get you on the executive route. I did that. Then after that, I moved to Facebook. There was a couple like inflection points, I would say, of specific things that happened while I was there that we can get into if you want. But ultimately, what it was that, I didn't want to report to anybody anymore. I was like sick of being told what to do. I didn't like that someone could put a meeting on my calendar at like, whatever time they wanted. And I pretty much had to be there. You can't say no. You got to go. And so it was those kinds of things. And, there's a couple things that happened where I was like, yeah, this is not how I want my life to be. Like, I want freedom over my time. I want to be, I didn't think this at the time, but now after reading the book, it's like, I want to be a sovereign individual. And so that's, ultimately kind of the theme that had me make the leap into real estate.
Interesting. And you knew you had sort of examples in that space, this guy that you met before. Like, did you see people in real estate kind of living the life that you wanted to?
Yeah, I think so. Look, I saw a lot of people making a lot of money, and I was like, that's great. I saw people having like relative freedom over their time. So that was great. I tried a bunch of different things. Like I looked at, I thought about going to Hack Reactor, right? Like to get technical skills to maybe go and be a software engineer. I thought maybe I could be a product manager. I went to go work in a Domino's. So I was like, maybe I could just, run these Domino's and like build a franchise. That'd be great. I lasted like one day and I was like, I can't do this. So I left that. So I tried a bunch of paths, and then real estate was the one that just like, really resonated with me with how I think about the world, some of my strengths as it relates to financial modeling, operational expertise, building systems, and those kinds of things.
What was the like experiment you did? You were kind of dipping your toes into a bunch of different stuff here. What was the part that you did in real estate?
Yeah. So what I would do every morning is I would take the shuttle from Facebook from San Francisco to Menlo Park, which is about like a 1 hour drive, both ways. And so that's when I was like running all my experiments. Like I was reading books, I was reading blogs, I was trying different things. Specifically in real estate, what I did was I said, I want to go buy houses in college towns. And so I was like, college is going to be around like for probably the next decade at least, I think. And so, parents sign on as co-signers onto these leases with students. Students sign 12-month leases, but they only live in it for 9 months. Like, this sounds great. So I was going to go do that. Then I didn't know anybody in real estate. I had one uncle that I knew was in real estate, but I had no idea what he did. I brought my idea to him, and he was like, yeah, you should not do this. I started with single-family homes as well. And, you make $200 a month. So imagine how many you have to buy to like, recreate the lifestyle you want or something like that. And I was like, oh, okay. He's like, what you should look into is multifamily. That's what I do, which is like these, larger apartment complexes. You get more economies of scale. You can have more people that work for you, so on and so forth. And so I went down that path, started looking. And I was like, all right, my uncle didn't work with anybody in the family. I was like, this is the one person that like I need to be working for though, because, I can trust them. They'll probably teach me really well, so on and so forth. And so what I did was I underwrote 100 deals in 30 days. I went to brokers' websites like CBRE, JLL, so on and so forth, downloaded the OM, like the offering memorandums of these properties from the websites, the financials, and then I would just put together like basic financial models that any real estate acquisitions analyst would do. Did all that, kind of got a sense for how I should be doing these, showed my work to my uncle.
And you did that just like volunteer, like on spec. You just kind of were like, I want to learn how to do this. The information is public. I can just kind of like go put in reps on this high value task and show what I can do.
Exactly. Like, let me go to practice, right? That's what I'm doing every day. I'm going to practice for 30 days straight, and I'm just going to get practice reps in, and no one is like telling me what to do. I'm allowed to do this. Like, anyone can go download these things. Yeah. So I did that, and then I showed him my work, and I was like, hey, I know you spend a lot of time on this. Look, I can just do this for you. And he was like, this is great. Let's do it. And so over the course of a year, pretty much did an apprenticeship for him where I, did these underwritings. I did a little bit of asset management, some investor relations, and just, progressively took on like larger and larger responsibilities up until the point where I felt like, okay, I can probably go do this for myself.
And do you mind recapping some of like what you learned in that, in doing all those reps of underwriting? I remember asking you at Capital Camp, like, what is the single most important decision in your business? And you were like, it's the buying decision. If you buy the right property, you can mess up a lot of other stuff. We don't, but you could mess up a lot of other stuff and still be in pretty good shape. And underwriting is kind of that is the core of that decision, right? That is like all the assumptions and ranges and balances. Can you like take us through kind of everything that you learned in those reps? Yeah,
totally. So, there's like a variety of factors of everything that you're looking at when you're underwriting a deal, right? So you want to understand like, okay, what's been going on at this property? Who lives here? What do the demographics look like? How have the owners been running the property? What's going on in the surrounding neighborhood? Like, has there been more multifamily built? Has there been retail built? Has there been homes built? Is there crime in this area? Where's the path of progress, right? Like, are people continually building in this area and it's getting better here, or has it been getting worse? Looking up like certain zoning plans, like, what are they planning? What have they done in the past? What are they looking to do in the future? All of those kinds of things. Once you essentially have somewhat of a portfolio or at least a trusted property management partner, then you can kind of refine your actual P&L, like pro forma expectations. So for example, how much money should I be spending on repairs and maintenance for a building that was built in 2000 versus a building that was built in 1980? In the beginning, maybe I was just using rules of thumb for that. But then over time, as you have a portfolio in this area, the number. There's no guessing, right? How much money should I be spending on marketing, on payroll, on all of those kinds of things? On the top line, it's, look, I have this property that I'm looking at. They're charging a $1,300 average effective rent. What are all the comparable properties in the area charging? What are the properties that are nicer than this one charging? What are the ones that are lower than this one charging? You got to secret shop these properties to understand, like, is one of the reasons that like just the leasing agents are bad? They're not running a good sales process, therefore they don't have high occupancy. So it's so much of just like, I spent so many hours, doing this, and then so many hours on Zoom with my uncle learning that, it's even hard for me to like recap, like, what are all those things? I think at one point I made like a underwriting checklist, and it was so long, but, over time, then you begin to suss out like, okay, what are the core things that matter, right? How can I evaluate a deal within like 2 minutes and then just put it in like the too hard or pass pile versus, okay, it checks these boxes. Let me start to go deeper.
Yeah. How many, like if you want to go look at 100 deals or something, how many are, hey, this is a profitable deal. Now we have to go to like the opportunity cost test versus you can throw out 90 because they suck. And the other 10 are hard to tell if they're all big wins, but you're kind of like, I feel pretty confident with these 10. Like, how does that break down?
Yeah. So in total, we get all our deals from like a variety of sources, right? So some are going to be off market. Some are going to be direct from brokers before it's actually been listed to the public. Some are just going to be public, like, hey, they've been listed and anyone can go take a look at them. Let's say if we gather all of those sources and we look at 100 deals of those, probably like 80 are going to be immediate passes where we don't even need to spend our time. I think that might be more of a subset over the past or more of a trend over the past 2 years, just given how high pricing for all types of different asset values have gotten. But that's generally what it looks like. And then of that, we're only, if you look at 100, we're buying 0.1. So last year we looked at, or maybe 0.2. Last year we looked at 1,000 deals, and we did 2 deals. One was a $29 million, 129 unit property, and then the other one was a $84.7 million property for 336 units. So 1,000 deals to do 2. So you got to look at a lot.
Is it like my only really analogy to this is like, well, I have a few different ones, but I imagine it's very different from like both sort of private equity company investing and angel investing. Like how many of those 1,000 do you go after to like win those 2? Or are you kind of like, if we're winning this, we're winning this? Like I imagine this is like a somewhat efficient market, right? A lot of these are posted publicly. A lot of people are underwriting the same things. What is that kind of like, oh, we want this one, to like, oh, we got this one look like? Yeah,
good question. I would say, okay, so let's say like of those 1,000 last year, we probably made offers on like maybe 8 to 10. Okay. It is a relatively efficient market. However, there's such variance in how people are underwriting, as well as primarily what their cost of capital and strategy is, right? So for example, like, if you're a life insurance company that's buying these real estate assets, all you're looking for is like, 2 to 4% yield, year one, and you're good. And, you're going to get some organic rent growth and stuff like that. And that's why they buy those, luxury buildings that you see in, downtowns in downtown Austin, downtown Miami, wherever, versus, us, I'm trying to get to like a 7% preferred rate of return as quickly as possible that I can pay to my investors, right? And then over and above that, we're trying to execute our business plan to raise rents to typically hit somewhere in the range of, on the very low end, a 14% IRR, on, a typical end, maybe 17 to 20% IRR. So, it is efficient, but every buyer has a different lens that they're looking at these assets through.
That's super interesting. I hadn't thought really about the like breadth of different owners that these things have and how they manage them and what they're optimizing for. So that's pretty interesting. I think there's also a lot of interesting stuff. Quite a few of the people that I've talked to who have bought small businesses or bought businesses at all are like, my first lesson learned was that smaller is not easier. And in fact is probably worse. And I feel like it sounds like you learned that lesson by osmosis through your uncle. But to go do what you said, your 2 deals were both like north of 50 million. Yeah. I think one was north of 100 million. That sounds really scary. And like a huge sort of leap to make. Like, how did you ladder up to that? Did you just sort of internalize immediately? Like, how important it is to just do larger scale deals. I feel like there's something really interesting in that. And I heard on your podcast with Chris Powers, you sort of break down some of those. I'd love to go into some of the kind of the importance of scale to your model.
Yeah, totally. So, the ones we did last year was a $29 million, and then the $85 million one, 84.7. And so, it's a good question. Like, when I was doing this apprenticeship with my uncle, I think that eliminated the fear of doing large deals, because I saw him doing a $50 million deal, and I was like, okay, that's just what you do. You don't do like a 50 unit or a 70 unit or an 80 unit or something like that, because, we actually did look at those deals, and just, when you're underwriting it, I'm like, okay, we got to pay the property management company like 8% for this 80 unit. And, we're not getting as good economy of scale on marketing, on payroll, all of those kinds of things. And then I realized, like, okay, so you need economies of scale, but like, what is the challenge that most people aren't able to get there? So typically it's, hey, I don't have that equity amount, right? And so I can't do this myself. I got to go raise that money. So it's not easy to, I think people on Twitter will make it like super easy to raise investor money. I don't think it is. I think it's tough. Like, you have to put in the time to build the investor relationships, right? Even now for me, like, I get nervous on every deal we launch. Like, are we going to be able to raise? And we do, and it's, relatively simple, but, that's like years and years of effort that you put in to create these investor relationships, buy deals, execute on the business plan, get good returns for investors, all of those kinds of things. So that's one piece of it, which is just the equity that you need is the challenge. The second piece of it is, just simply like the net worth requirements that you need for the loan, given that this is, if you're buying a duplex or whatever versus buying, these larger ones, it's just like a much different ball game. You have institutional lenders that are looking at your track record, looking at your background. There's net worth and liquidity requirements, all of those kinds of things. But again, that can be solved by, if you don't have it, you go find a wealthy person to partner with you on. And then lastly, just to kind of wrap it up and answer your question, which was like, I went after it because that's just how I thought. Like when I saw my uncle doing it, I was like, this is just how you do it. This makes sense to me. In order to do it, you have to solve those number 1 and 2 problems. Let's go figure out how we solve those. On number 1, we created the investor relationships. We executed on our deals. On number 2, we have 3 partners that, have all done relatively well. And so we're able to go buy these deals.
And what is the order of operations? If you commit to a deal, then go raise the equity, or do you get a period of time to say let me go see how much I can raise if we can take down this, $80 million deal, or do you just have to leap and hope you can raise the money on the way down?
Yeah, you got to leap and hope. There is a caveat to that, we kind of know how much we're able to raise, right? Because now we've done this enough that when we launch a deal, we know how much we'll be able to get. And so the way it works is, we're always looking for deals. One of my partners, Suppan, he leads our underwriting and acquisitions. He will be looking at deals every day, talking with brokers, reading market reports, all of that kind of stuff. And he'll find a deal. Ultimately, we like it. We'll go tour that property along with our property manager, our loan broker, as well as, the real estate broker that has the listing. Kind of take a look at some units, walk the property, see what the deferred maintenance is like how much do we have to spend on this property to fix it up? What are we going to do on the interiors of these? Then we'll go do our, due diligence, I would say high level due diligence, kind of underwriting the deal. Then we'll say, okay, here's what we can get to. We'll figure out, is this purchase price going to work for the seller? Negotiate the PSA, get it under contract. Right when we have it under contract, typically you have about 45 to 60 days to get all the financing done, get the equity, do our deep due diligence where we go walk every single unit, look at all the leases, look at all the bills, look at all the contracts that they have, all of that kind of stuff. And then meanwhile, we're also doing the equity raise and, then we close on the property. So you get under contract first, then you raise the equity. But, we're always talking to our investors, so we know always typically how much we can raise.
And so you just have a very crazy 6 to 8 weeks there. You're raising all the money and finding all the hairballs all at the same time. And
yeah, exactly. We've got a relatively efficient process, kind of. So when we get it under contract, we send out. We've already talked with the seller early on of hey, we want to get on site. Right after we sign the contract. Right after we have it, what we'll do is we'll send a 1-pager that goes to the seller, which says here's who's going to be on site. Here's how many people will be there. Here's the amount of people we need to with us to escort us into each unit. Here's the roofs we need. We're going to be getting on all the roofs. Where's the access? Is it, through the building or over here? We're going to put cameras through pipes on this date. So we lay it all out in a schedule. So it's super organized for sellers to be able to work with us. And then we get that unit walks and all of that stuff done within the first 3 days after having it under contract typically. So after that, I know okay, this property it is given to us as presented, great, no risks. And then after that, there'll be certain follow-ups hey, we saw that this lease, says $1,100, but on the rent roll, it says $1,200. Can you help us explain the difference? Those little kinds of things. But that's pretty much how it works.
That's awesome. I feel this is, I think, where I want to spend most of the meat of the time, because I feel the way you guys have built your company is, I don't know how unique it is in the real estate world, but it seems, at least from the outside, to be incredibly efficient and well run. But I think a good starting point is to, you've got 2 partners. And how did you guys come together, or how did you find each other, and when did it start? And then I want to get into some of the operational stuff that you guys do, which is super cool.
Yeah, totally. I do think it is unique in the real estate world with how we operate. I don't think it's like in a very traditional sense, at least how we run the kind of, holding company.
Yeah.
But yeah, my two partners are Suppan and Pooja, who are both brother and sister. So Suppan leads our underwriting and acquisitions, and then Pooja leads our asset management, which is, really just overseeing the property management company, making sure our business plan's being executed on the property, so on and so forth. Both just really good people, have great values, have extremely high integrity. We have just very deep trust with each other. And so we know things are going to get done. We know that they're going to get done at a very high level. Super helpful. I met them when I was doing the apprenticeship for my uncle. I had met both of them because, they were doing deals as well, and my uncle had done a deal with them. And so then we started doing JV deals together, me alongside them. And then over time, we just realized, like, hey, we should all just do this under one umbrella because we work really good together. We all seem to want to build the same type of company. We all have very shared kind of values. And then we each have like very complementary strengths to each other that it would allow us to run a really successful business. And so that's, how we came together. And our strategy was the same from when we started individually, and it's been the same as we've, come under one umbrella.
That's magic. I love those kind of organic sort of like, we met, we did one thing together, then we started sort of serially doing stuff together, and then it just kind of, it's easy to trust that. You don't spend a lot of time losing sleep over those things. I remembered a few sort of small detail questions to go back to. Did your uncle pay you for your apprenticeship?
He gave me like a small amount for one of the deals that we closed.
Okay.
I told him though at the very beginning, like, I don't want to make any money from this, right? Like, I'm just here to learn, so don't, like, I don't need money. And, to his credit, he still gave me a little bit for helping to close the deal.
That's awesome. There's an underrated approach, I think, if people can do it, to spend a chapter of your career like very intentionally apprenticing and absorbing and doing work and in sort of a volunteer capacity, but expecting or trying to earn your keep in knowledge, not being shy about demanding education in exchange for all your hard work.
Totally. That's a huge point, I think. Like, you can do anything. Like, I don't know, it's kind of cliche, but you can do anything you want. Like, no one's holding you back from anything. I used that as an opportunity because I had like saved money before, because I was like, hey, this working thing is not going to work out for me. So I have to save money. Like when I first went to work at Facebook, my now wife, who was my girlfriend at the time, we were long distance. So I just lived in like East Palo Alto at first, which is not Palo Alto. Like, it's not nice. And I had a house with like 5 roommates, and I like ate all of my meals at Facebook. I used the gym at Facebook. I saved like everything I could, all to be able to do an apprenticeship. And I've talked to people because I'm pretty vocal about the apprenticeship model, and a lot of people have said like, yeah, here's what I did, to go, get my foot in the door. And I think it's super underrated. And if people can put themselves in a position to do that, you can connect with like virtually anyone that you want to connect with.
Especially, I think, in real estate, where there's not always obvious like entry level roles at these firms, right? And when we get into kind of how your company is constructed, I feel like that'll get a little more obvious. The other detail question I think is interesting. What you said, like, it wouldn't work with a 8% to your property manager's expense ratio. With some of the smaller properties that you looked at when you were underwriting, what do you get with some of those larger multifamilies?
It depends on the number of units and the revenue it's generating. But generally speaking, let's say for something that's like 300 units, maybe you're paying about 2.5% of total revenue.
Whoa.
Yeah. And then 200 units, maybe it's 3 to 3.5%, something like that. So it's not that it doesn't work on the smaller properties. Like, it works, but just your margins are much thinner because you have to hit an absolute value dollar amount to make it worth it for the property management company typically.
Yeah. I mean, I think I pay I'm not sure what the effective rate is. So I have just one single family rental, and I basically pay 10% plus first month for placement. So the effective rate, depending on turnover, is probably like, 12 to 15%, depending on how long a tenant stays. So I heard you talking about that. I was like, oh, that makes a ton of sense. And I don't think I'm getting like taken advantage of by the property manager by any means. It's just the cost structure for them is much worse to manage individual properties. So that makes a ton of sense. It's also, I've heard you talk about your property manager before, like really easy to get taken advantage of in that relationship. And there's a lot of, especially on the smaller side, I think a lot of kind of shady practice in property managers. So that is a healthy fear that I have of, like, especially in the single family market, especially if you're not local to that neighborhood. It just, your underbelly's exposed.
Yeah, totally. There's a lot of just like, stuff that can happen, I think, that can just, it's too tough to get caught, right? Like, regardless of size of property, there's just so many things that are happening that you don't know, right? Like, it could be so easy for a property manager to be like, okay, we need landscaping. Let's get 3 bids, figure out who's the best. It could be super easy for a property manager to just get a kickback from, a landscaper to be like, hey, you come in at this price, you give me a little bit of this off the top and, we'll go with you or something. And I'm sure that, I know these types of things have happened. However, with the property management company that we use, we made a very deliberate decision to be like, we're not going to do property management. We're going to outsource this the best because we believe our strengths are, focused on these other areas. And so we use this company called Bell Partners. They're like one of the largest multifamily property managers in the nation. They've been around for 45 years. They manage about 70,000 units, and they're just like a top tier, best in class team, particularly in the markets, that we play in, which we have experience with them. Just an amazing group of people. They've built great processes, great systems, and you can trust them. That's been amazing.
Awesome. So, okay, let's talk about some of the structure of your firm. So what were the things you were trying to, or the vision for how you were going to build your company when you guys set out and first started? Has it changed over time? Like, how did you decide? You sounded like you were engineering for freedom, at least on a personal level. But you knew what kind of deals you wanted to do. You knew who you wanted to work with. What are all the decisions that kind of followed on from that?
Yeah, so it's interesting. It's probably taken a couple different paths. So when we first started, our intention was like, let's build the biggest real estate, private equity firm that we can, right? And I think we were just like a little bit naive, but we just started executing and winning deals and stuff like that. And then we started thinking about like, okay, if we want to do this and be one of those big ones, we have to go, and primarily our investors cannot be the type of investors we have right now. It needs to be people that are like institutional capital, right? Like Blackstone and Carlyle, and those people need to be our investors, where, they're putting up like 9 to 10 figures with us and we're going to buy deals. However, after talking to enough people that went that route, what I realized is that if you do that, you have no freedom. Like all of your control is given up. A lot of the mandates come from them, buy, sell decisions, budgets, refinancings, just really everything. And so building that type of business is very different from the intention of what we wanted our lives to be like. And so what we kind of, and so we didn't go down that path, and kind of what we realized is that, okay, it's best to have, the types of investors that we do. You also don't have kind of like investor concentration risk because you have a lot more investors. It's a little bit more fun because like you are able to connect with like real people. The best thing about our investors is that I meet people that are well ahead of me in terms of like career success, building like large and amazing families and things like that. And just knowing life much more than I do, and just like teaching me a bunch. And that's the best thing about some of these investors. So we went down that route, and then kind of we took inspiration from Berkshire, but particularly how they have their head office, right? which is just a handful of people like, Charlie, Warren, Ted, Ajit Jain, and then I think Greg Abel. 5 like main people in, a couple of those running businesses. And then everybody else is just like admin assistants pretty much. And so we just took that same model to say, we don't need a lot of people in the type of business that we're building. What we need is maybe, 3 to 5, maybe like 3 to 4 full-time employees. And then besides that, just like assistants/VAs. And that's how we've went about building the business, because it's a very process and, systems oriented business.
Was there a North Star that you were looking for as far as like, we're dancing around leverage as the topic, which I think is, and I never want to like impose language. So I want to kind of pull out of you like how you were thinking about this at the time. Are you like, oh, scale isn't great, so we'd rather go for efficiency, we'd rather go for scale per head count, we'd rather, or just like set a hard cap on head count and then scale to as much sort of AUM or portfolio size as you can? Like, what was the new framework, or set of constraints that you put on your growth once you realized you weren't just kind of nakedly pursuing scale?
I think the way that we, in the beginning, like I wouldn't give us too much credit. Like when we first started, it was just like, hey, we just need to buy properties and they need to be good properties and we need to like execute on these business plans, right? In the beginning, I understood financial leverage really well because I was like, oh, you take debt on these properties, and because of that, you're able to juice your, equity and cash on cash return percentages, right? So that's great. And you have to be comfortable with leverage, and like doing certain things like having mortgage reserves, buying interest rate caps, stuff like that, so you don't get blown out by leverage. So I understood financial leverage very clearly. As we started building the business and kind of implementing like processes and systems and SOPs, what I didn't realize was that all of those things are building leverage, where every time I'm going to go do something that I know either can be automated, is going to need to be repeated, or I don't like doing, that can be either automated, eliminated, or delegated, and you have to figure out which one is which, right? And so that's kind of how, over time, then I just started pursuing that. I wouldn't say we hadn't necessarily put any constraints. We just said, like, here's the lane we want to play in, which is we want to make money for, people that we like and that we admire. We want to go buy these multifamily properties, 100 to 400 units, really only in like 2 markets, like 1 to 2 markets. And we want to just have a very simple business model. If we buy 0 deals in a year, like that's not a failure or a success, because like that's just what happened in the market. If we buy 1 deal a year, 2 deals a year, that's great. But like we just want to be patient, buy these great deals and stuff like that. So I wouldn't even say we put constraints on it. It was just like, let's build this business. Let's keep it simple. Let's build these processes and systems. Over time, right after I read kind of Naval's like How to Get Rich Without Getting Lucky Tweet Storm. I read your book. Then I started realizing more of these different forms of leverage, right? I mean, it's probably one of the reasons I got active on Twitter. As we've built these things into the business, I've realized like, oh, this is leverage, right? This isn't just processes and freeing up your time. Like this is leverage. And so it was just a different reframing for me over time after we did these things.
Yeah, I think I keep hearing like different books, and I feel like the Delegate, Eliminate, Automate is like, that's the Tim Ferriss thing, like the 4-hour work week, which was just like OG. I don't know. When did you read that? Do you remember? Like how old you were?
I read it while I was at Facebook. And to my point earlier, like, people can put meetings on your calendar and you have to show up. That week I just started declining meetings and like not showing up to things. And I realized like, oh yeah, this doesn't work, if you're like typically like a normal type of employee, even though he said like it could work and, you have to like do it gradually and you can be a remote work employee. I think I went like from 0 to 100. Like way too quick. And, people are like, what are you doing? This is not allowed.
Was there anything that you did bring from Facebook into your or your broader tech experience into the real estate industry?
Yeah, I think just okay, so first is, from GE actually, which was like when I first started, everything was just SOPs. Like, you're in this entry level rotational program, you're switching every 6 months. And so, when you go into a role, whoever was in the role before you, they had created like a 100-page standard operating procedure, which was like, here's all the Excel things you do, right? Here's where you click the button to do this, this, and this. And so I remember that, and I'm like, wow, that's like a great way to just like train anybody, right? Like anyone can go do this. I got a college degree. Like, I don't need to be doing this. Like, I should outsource this. But that's one piece of it. I think broadly working in tech, I don't know if it was from Facebook in particular, but I think just working in tech, you get more exposure to different types of things. Like, all these skills I learned, like copywriting, writing online, how Facebook ads work, how virality works, all of those kinds of things. There was probably like habit stacking or talent stacking, where I've applied those over time to our real estate business. An example is like probably Twitter, where, in the beginning, like we just bought properties. Our investors were our Indian uncles, and, the word of mouth that would grow from their friends. And, then I started writing on Twitter, like about real estate and what we do. When I joined, or when I started getting active, rather, I think on real estate Twitter, I felt like there was like 5 of us. Yeah. And then it was fun. We were just talking about real estate. And then over time, I realized like, oh, wow, like a lot of what I know, people don't know, and they want to hear more about it and learn more about it. And, a lot of the skills I probably learned, like writing online, virality, so on and so forth, have been helpful on Twitter and, meeting new people and things like that.
Yeah, you do a bunch of great threads about, I don't know, your acquisitions process, your VA process. The line you wrote stuck in my head, which I'm sure was very designed to do. If you make over 100K a year, you should have a personal assistant. I don't know how arbitrary of a call that was, but it was the perfect way to. I think that was like the hook line on your the big thread of like everything that you learned working with virtual assistants and EAs and stuff.
Yeah, totally. That thread, like, I feel like once a week or at least once every couple of weeks or something like that, I'll get tagged by something random, which is like, someone asks a question like, oh, how do you work with virtual assistants? And someone's like, oh, like at Rohan has a good thread about this or something like this. And I'm like, oh, wow, this is the leverage that, you wouldn't have all talked about that I'm now seeing here, where it just continues to live on and live on, like a year later, whatever it was.
Yeah, the benefit of that long tail of good content, like especially if it's evergreen, is like really, really incredible. They just keep paying dividends, and like, it's not like tweets have royalties or anything, but they continue to accumulate or continue to be like signposts, I guess, towards sort of the rest of your work, which I'm sure for you guys, helps bring in talent and deals and investors and stuff, all kinds of things. I forgot to tell you earlier, I'm having a Werner's in honor of our mutual Michigan roots. Trying to get a theme going. So how do you, when did you start bringing in virtual assistants and EAs into the business? And what are some of the things that you delegate or automate? I think the piece that I brought from tech that I'm sure you did too is like, you just work close enough to developers and you see them have like pure hatred for any repetitive task and how they turn to like all kinds of SaaS tools more often than not. Like they don't always code up a solution, but just really being really handy with Zapier or webhooks or APIs and things. You're like, oh shit, that is easy. Right. Or at least it's easy for you. All of those kind of things I think are really helpful background, especially when you come into a real estate industry that's not nearly as tech savvy or tech native, I suppose.
Yeah, totally. I think that that's a good point on Zapier. Like we use that so often with a lot of the processes that we have, whether it's with gathering investor commitments or other types of things where things just happen automatically, right? And that's an example where it's like, hey, we can go, instead of doing this process, like we'll just automate it. It needs to be done, we'll automate it. It's better than delegating it because it can't be screwed up. I mean, unless it's something in like the code changes, but yeah, that's super helpful. That's one thing I learned from there. We implemented and started using VAs from day one, because before, when I was at Facebook is when I started like using the VAs after I read, the 4-Hour Work Week. And it took me a while. Like at first, it was a complete failure. I wasn't good at giving directions. I don't think I was good at interviewing and finding the right VAs. Sometimes I felt like I was just like making up work just for this VA, where it's like, I wouldn't do this normally. Like, why am I having this other person do this? But those are the like mistakes and failures that you learn from. But when we did it for our business, we just used it from day one. And it goes with like a bunch of the processes that we use. So for example, we make distributions to our investors on a quarterly basis. Now we do that, with a full-time employee that, goes through and makes the distributions, through the bank account. But the VA is the one who makes that, who reflects that in the investor portal, right? Where they'll put, hey, the distribution has been processed, so on and so forth. We write investor updates on a monthly basis. That's something that if you think about it, like, it's not just writing it, right? You can write it, you write it in Google Docs or whatever, but then after that, you have to format it, you have to put the nice pictures, you have to make sure the pictures align, you have to convert it to PDF, you have to go to the portal, click the buttons, upload it. The VA does all of that. We just write it, here's the link, they take care of all of that. And
you
save
do that
yourself
on a per property basis, right? Because you're syndicating all of these individually.
Exactly. Per property basis. So you save yourself, let's say, like, 5 to 7 minutes on each property, that the VA does all of that stuff for you. And then it's done on a monthly basis. We'll do things like, when we're doing a raise on a deal, and we confirm investment amounts and wires, we, like, a VA will have read-only access to like that specific account. They're able to email the person, hey, your wire has been confirmed. That would be so much work for, me or someone to be doing on a daily basis. We check it, the bank account like a couple times a day during the raise. And then over time, they just start getting more things. Like they start handling your email inbox. They manage your calendar. They're kind of like a shield between you and what's the inbound that's coming at you, right? And so it's super helpful. Like, you just stop worrying about all of these little things that happen in life. Even the personal stuff, right? Like, my umbrella insurance needed to be renewed, right? Like, I didn't even know that. I didn't even know that it was renewed. I just know that, my one VA, she did it, and then she told me after. And so it's all of those things that just are off your plate, and you don't need to be thinking about these things because they're not strategic decisions, and you don't need to be doing these things because they're normally a waste of time.
Is there anything that you consider too small to be automated or to be delegated? So I have a framework of like, let me start with this. So I have a framework of how I think about what should be automated or delegated to save time. And it's like a formula. It's time of task times frequency that it occurs, right? So if you're doing something that takes you 1 minute and you do it on a yearly basis, okay, then like, even I would consider actually delegating that, but maybe I don't need to, right? Right.
Just so like, let's say it's something I don't like, just so I never have to worry about it again, right? So for the rest of my life until I'm whatever years old, I don't have to ever do this again. So, but yeah, I honestly do try to delegate like every single thing that, is repeatable or that I don't like doing. And yeah, that's kind of how I think about it. I think more though, important is like what types of things can be eliminated. I think a lot of things, people do and that like I've done in the past, which I have to think of some examples, but I was just like, why are we doing this? Like, we should just stop doing this. This doesn't matter. Like, let's just eliminate it. We're only doing it because we've been doing it. Like, this should stop now. And so we just eliminate it, and we don't waste anyone's time doing that.
Which is just the beauty of simplicity. you're like, it's just such a relief as soon as you, that is the best thing, which is to just deleting shit off your calendar. Like now that you can get away with it, it has to just feel like pure bliss.
Yeah, totally. Sunday night ritual. Go through and just delete things off the calendar.
Yes. Delete, punt, reschedule. Yes. Love those empty days. Is there anything else that's like out of the box that you have your EA do, either personally or, I've done a few episodes. I just did one with, some of the guys at Athena, and just like, I love how far they have pushed this into either insanely like minutia, or insanely big projects that they have EAs have. So I think some people a lot of times are surprised by what they can hand off, or the new things that become possible, like the complexity of system that you would never engineer for yourself, but you can delegate the creation of a system to the EA, and sort of like let that the process improvement compound by like making the improvement a delegation in itself.
Yeah. I mean, I just pulled up my list here. Like, it's everything, dude. It's like downloading books for Rohan from Amazon to his Kindle. So, like, let's say there's a tweet, and it's like, here's my 10 favorite books, and I just see it, and I'm like, oh, this is awesome. I'll just click the link, share to her, and the VA will like, download all the books to my Kindle, right? So it's like something even as simple as that, where like that thing probably happens once a week, where I see a book on Twitter and I want to go do it. Like email hotels to get upgraded rooms.
Does that work?
Yeah, sometimes. It depends. Depends on the hotel.
All right.
Yeah, just honestly everything. Like everything that you. Well, my friend said Eamon said this thing.
Eamon Abdullah from AppSumo.
Yeah. He was the CEO
nice.
of AppSumo. He grew it from like a crazy amount, like $3 million to like $100 million in lifetime revenue, I think, which is amazing. But he's a great operator. He said this one thing, which was like, for certain types of businesses, and kind of what you want out of life, you should think about, how can I run this business from my phone? So now pretty much every time now I try to do that as much as possible. And whenever I have to go to my computer to do something, I think about, like, can I take a Loom video for this? So this can be a process that gets delegated, or is this something I can automate? And if so, let me just take the additional 15 to 20 minutes or whatever right now to do that. And if you just keep doing that over time, it's going to, compound over time. In the beginning, when you get the VA, I think it's tough. You spend a lot of time creating these systems, but over time, it really pays off.
Yeah, did you have to fight through that sort of like, this could be a 2-minute task or a 30-minute training session, but you're just beating yourself into making those, or inspiring yourself, I suppose, probably more positively, into making those investments, so that like training yourself to think in that delayed gratification like sort of way.
Yeah, I've tried. I mean, like, yeah, it happens. It even happens now, right? Where I'm saying, like, I should just take the 20 minutes to do it. And I'm like, I just don't want to do that at all. But it's good for you. And so what I've realized is, like, when I do have the motivation then to do it, when you see the video and the video's at like 17 minutes or whatever it might be, you're like, okay, like, this wasn't that bad. Like, why am I complaining about this? Like, I should just always do this. So I don't have a secret other than, like, you just got to do it. And then once you're done with that, like, you're so happy. So, yeah.
Loom's a great tool because it's like, you're going to do it anyway. You may as well take a video of it and talk through it. And that's really the only difference. And I mean, you're at the point now. How many VAs work at your company?
We have 3 full-time VAs.
3 full-time VAs. And then some, do you have local sort of help as well? I don't know how you...
Yeah, but that's kind of on like a part-time basis. So, okay. Some of it will be for work, but actually most of that stuff is personal. Like, I'm going to sound like super lazy right now, but... Yes.
The more embarrassing the delegation, the better of a story it is, and the more inspiring to the rest of us. So, yes, please bring it on.
So, this will sound ridiculous, but... we get so many packages from Amazon, and we don't cut the boxes down after. We just like throw it in the like garage or something. And so I'll have someone come to like cut down all of those boxes and then, put them in garbage bags and like, just get them ready for trash and stuff like that. So, that's something I'd never done before. And then as I started getting into delegation, those kinds of things, and really taking it to like, there's certain things I never want to do. And like, we should just cut these boxes down after, but we don't. And so it's fine. Someone will come, they'll do it. We'll pay them. We're giving someone a job and some money, so that's good. They'll like take my car to the car wash, which is great. They'll like handle certain types of admin things, like the DMV. We needed to get like a new license plate, so they just went there. And like going to, I never want to go to the DMV again. Like it's so terrible.
Can you outsource that?
Yeah, so what I did was I sent him, and I was like, hey, if there's any problems, just call me. There was a problem. They were like, yes, sir. He can't just show up with, like, your information. Like, he has to sign a power of attorney form. And they're like, you have to sign it. And I was like, oh, okay. So I was like, yeah, just put him back on the phone. So he gets on the phone, and I was like, okay, just go in the parking lot, fill out the form, sign my name, and just go back in there. And he's like, all right, cool. And so, just like a power of attorney for this, not broad, but just for like this one particular task. And then he was able to do that, to renew a license plate or get a new license plate or something.
That is a super, I bought my first car at CarMax, and like when you're checking out, they do limited power of attorney for like, so that they can go to the DMV and like just have your plate mailed to you. And it's such an awesome addition to the service. Actually, it really makes it seem super easy. I totally forget that that's a thing that you can do or like send somebody to. So this is magic. Like that is an awesome story. Who are these? Like, is this like TaskRabbit? Are you going through like Airtasker platforms? Are you hiring each of these tasks individually, or is this like one or a few people that you kind of come back to over time?
Yeah. So this particular person, he reached out to me on Twitter last summer, and he was like, hey, I want to work. Like I had an internship or it fell through, or maybe he was just late on getting one or something. He's like, I want to work for you. I was like, hey, we don't really have any work right now, but like one of the things I've wanted to do is build a course to teach people about real estate, and like help them buy their first property or whatever. And so I was like, I can get into Maven, which is like, a course type of platform, and they'll teach you. Did you use Maven?
I've talked to Goggin about it when I was working on the leverage course. It wasn't a fit. His is a cohort based, like pre-scheduled courses only, and ours is kind of evergreen. But I think it's a really cool platform. I got some buddies that teach courses on Maven.
Yeah. So we did that, and they had like a 4-week thing, which was like, here's how you build a course. Mm-hmm. So I was like, why don't you come? You can just you attend these sessions. I'll tell you like everything. We'll meet for like 1 hour each week. Just come to my house. We'll talk through it. But you'll build like the slides and everything like that. I'll just do the final review and make any changes and stuff like that. So he did that. He did an excellent job. I forget what we had. Maybe like we didn't have a lot of people. Maybe like 10 to 20 people, something like that. And then we did the course. I paid him for it. He was happy. He got like a good type of like scrappy internship experience. Let's say he got to learn a little bit of stuff about real estate. And then, now this year he has an internship at Dell. But I was like, hey, I need some help, like, around the house and stuff. Like, I'll just give you cash, like, for beer money. He's like, yeah, sure. Like, I'll come on over. I'll do whatever you want. And so now he comes over, handles stuff and everything like that.
Yeah. So it's
really
like a trusted relationship kind of deal.
Yeah, totally.
And next summer he'll be like underwriting, real estate deals for you. He'll be self-apprenticing.
Yeah, exactly. That's what he doesn't realize. I'm going to hire him after he graduates.
Is there anything in your business that cannot get automated or delegated, that is either like precious to you or stubbornly resisting your attempts to eliminate, automate, or delegate?
Yeah, I mean, one of the biggest things, like for me at least, and kind of how I think about like what I focus on in the business is really like our investor inquiries, right? So for example, if an investor emails and says like, hey, my distribution like does not make sense in the portal or something like that, the VA can handle that because that's really just like back office stuff. But if the investor says like, hey, I want to have a conversation, kind of just want to understand what's going on in the real estate market, so on and so forth, blah, blah, blah. Whether it's an email or a call, like I'm handling that. But what I've done is kind of like delegated my email inbox where, if it's like a high priority person, one of our investors, one of our partners, something like that, I'll just get a message from the VA immediately like, hey, this person emailed you, and I can email them back like within a minute, right? Versus needing to like always have my email inbox up on a screen, seeing everything that comes through and, deleting, replying, whatever, that helps. So that's one piece of it. From an underwriting and acquisition standpoint, we can like automate some of it, but actually getting into the details, doing the thorough underwriting, that needs to be done by, someone who knows what they're doing. You couldn't really have a VA for that. And then from an asset management standpoint, again, you can automate, you can delegate some of the back office things, some of the consolidation of reports, some of the presentation of data, so on and so forth, but really overseeing the property manager, make sure they're executing that needs to be done by, a person that has specific expertise in that. Yeah. So there's certain, like I would say, core elements of our business where we're the best at these certain things that we could not really automate or delegate, but we can automate or delegate certain parts of that stack.
Yeah, it's amazing how much, especially when you start from doing it all yourself, how much of like modern white collar work is just like moving information between portals or formats or units or media or PDFs or inboxes or whatever. And it's incredible how much value can be created in your own businesses by like having people who do that kind of stuff on, according to formulas and systems and in a timely way, and how much time that really frees up. None of it's hard, but there's just so much of it, and so much more of it that you can do when you have a system for doing it, right? Like there's just a bunch of extra value that can be created. I feel like, the inbox delegation is an interesting example. So like, instead of having email notifications, like you probably have email notifications on your phone off, right?
Right.
And you rarely open your inbox except that 4-hour work week, like batching thing. But there are emergencies. And like, if there is one, you can rest easy because your VA is checking that and will like text you, but it's screening the like dopamine roller coaster of always looking at your email and always seeing some annoying new thing that comes in, or triaging everything yourself. But I'm sure the value to your life of not having email notifications on, but like is that elimination of that sort of shitty stimulus that you've just turned into a little system. Like I imagine most people undervalue how much happiness is on the other side of that.
Yeah, totally. Some people would say, like, one argument could be, hey, they're going to ping you that, you got an email from someone anyways, so why don't you just keep the email inbox up and just look? And then when you do see it, but it's like, no, but like then I'm looking at every one, right? Every like junk mail that comes in, every email from someone, and then I'm constantly getting distracted. Another example of this is like, let's say that Amazon book thing, right? So let's say I wake up in the morning and, I'm like, okay, like let's say there's 3 things. I saw on Twitter this Amazon book I want to buy, or this book or whatever I want to buy. I need to order, some kind of vitamins from Amazon, and then I need to I get like a coffee subscription. I have to get this coffee. I have to reorder it. And then, I need to make a tea time to go golf or something like that, right? All of those things are like, 2 to 4 different apps I need to go in, like 5 buttons each I need to click and stuff like that, versus me literally just pulling up Slack, like knowing those things and being like, hey, order coffee, order this vitamin, book tea time for X time, add this book to Amazon. And then like I'm done and I just go on with my day. So it's kind of like something where it's like, look, I just have to only use like one app or one screen, which is just Slack, and I just put everything in here, and I don't have to go to all these multiple sources. It seems small, but like over time that adds up. You're not distracted by all these other areas. Your focus is really just on one thing, which is like, this person is my kind of barrel that's allowing me to take my thoughts, get things done for me, and allow me to move on to some of like the more high value things that are important for me.
Yeah, that's an interesting piece too. What do you fill your time with when you are able to offload some of these things? Something we talk about in the course all the time is do the things only you can do in a work context, but also like being sure that you use that time well, whether for productivity or just enjoyment. So what are some of the things that or I guess how has your life maybe changed now that you've made such an investment in these?
Yeah. I think it depends based on the stage of the business that we're in, as well as like exactly what is the priorities of that time. So what I mean by that is the stage of the business early on, when we had VAs, I would just spend all my other time kind of like, be looking at deals. We would be talking to new investors, making sure current investors understand what's going on, all of that kind of stuff. So all of my focus was directed on other high value areas of the business, primarily around finding new deals along with Suppin and, talking with investors. As time has went on, and let's say probably over the past 18 months, there's not a lot of deals out there. So we're just like super patient. We have like a really strong base and large base of investors, so we don't really need to talk to too many new investors. Although like, we still make time for that. And so a lot of my time now is just spent like, honestly, just like enjoying life. Like, we have a 19-month-old daughter, so like spending a lot of time with her, spending time with my wife. I'll read a lot. I probably read a lot more now than I've done, previously in the early days of the business. Some of this is like, some business books, but a lot of history, really just like anything that catches my interest. I'll play a lot of golf, things like that. So, I'll do things that like, just allow me to enjoy life and be happy. Because I felt like, one piece of it was like, hey, don't create this business so you just like work all the time. You created this business because you wanted the freedom. So now like, it's tough, right? To be like, don't keep moving the goalposts and don't keep working when you like, you don't necessarily have to like take some time to like sit back and just like enjoy life because you need to be happy. And so I always, try to do that. Yeah.
You don't want to make your own Facebook trap.
Right.
You did all this work to save it. And I don't, I'm sure we both have the same sort of, scrappy Midwestern work ethic. And so part of me, is like, doesn't allow myself to enjoy things unless I have done my 18 hours of work that day. And the other somewhat more enlightened part of me knows that is an insane thing to say and feel and live. And that,
totally. Yeah, there's times where I'm like, I'll go golfing and about like 2 hours in, maybe even 1 hour in, I'm just like, man, should I be doing this right now? Like, should I be working right now? I'll like check Slack and like nothing's happening. I'll check my email, like nothing's happening. And I'm like, okay, but like I should be doing something and not this. So it's really weird, to kind of have this mindset shift.
And how do you balance that with your partners? Like I struggle with that, even sort of being my own partner and owner and solo and most of the things that I do, the fun aside, but there's kind of a very understanding that that's a part-time, like having partners in a full-time business here. I imagine, that's even a little harder to navigate. Do you guys have, how does that work between you?
Yeah, we each have kind of, very structured roles and responsibilities, right? So we're each pretty much responsible for one area of the business, right? And so, for example, let's say that we weren't able to raise money on deals or something like that, and I'm out golfing and stuff. Well, then it's like, Rohan, what are you doing? Like, you're not spending your time appropriately, right?
Yeah.
And then a very similar instance in the other two cases for where they live. So we really do try to focus specifically on outcomes, right? And getting things done. Hey, if you're getting your stuff done, if the outcomes are there, then I don't really care how you're managing it. yeah, all of us have kids, and so we have like, we can like empathize with each other, right? And that like, you want to spend your evenings with your kids. You don't want to spend your evening on, you know, on work and stuff like that.
Yeah.
You don't want to spend your weekends working. You want to spend it with your kids. I would say like before I had a kid, I would work a lot, and I don't know if I had the most empathy. But again, my partners, like they always were executing well. They get stuff done at a high level. You know, we were selling a deal the other week, and you know, Pooja was up until like midnight or 2 a.m. like 2 nights in a row trying to get stuff done. Now, she didn't have to be. She could just be like, hey, like, it's okay. This will get delayed a little bit. But she was doing that because she's dedicated to the business. So I think it all just comes down to like having the right partners that, you know, they have their own personal responsibility. They have a high standards. They're just going to get shit done, and you can kind of rely on them. And yeah, that's pretty much how I run the business. Haven't had, you know, any problems. And we do certain things. We'll implement things, right? We do a Monday partner meeting, go over the priorities for the week, how things are going, stuff like that. You know, 2 times a year max, maybe 1 time a year, we'll do 360 feedback. So we'll sit down. 2 of us will sit down. We'll do what the third partner's strengths are, their weaknesses, where they need to get better, things like that. And then we'll present it to that person. And we trust each other, so we know that we can be very direct with each other on what's going well, what's holding us back, where they need to improve. So we've put in those kinds of mechanisms to, you know, help us be a high functioning team.
That's awesome. I want to kind of ask you to compare all of the places that you've worked in your career, because I don't know too many people who have such a variety. Do I have it right that you're like, I don't know if it's your first job, but some early job, you worked at McDonald's?
Yeah, that was my first job.
Okay. First job at McDonald's, then like GE, Facebook, starting your own company. Like that is a massive sort of, breadth of experiences and things. Like, how do you compare like the pressures and the strains and the stress and the work that you do now as an owner of your own business, but in a very high leverage position versus sort of the workload or the stress or the strain of something that is like hectic but well organized, like McDonald's, or like super high pressure but open, like Facebook. You know, that's a very interesting sort of set of things to contrast, and I imagine are easy and challenging in very different ways.
Yeah, definitely. You know, McDonald's was a very stressful job. I was like so bad at like doing the screen, and you know, people are like firing their order at you so quickly, and I'm like, hey, my fingers don't move that fast, so you got to slow down. So, you know, I did a couple, like I worked at Max and Irma's, which was in Michigan. I don't know like how many other places that is, and I was a carryout boy, and they gave like, I worked there for 1 week, and they gave like $250 in gift cards to people because I messed up so many orders. And so I think working in food is just like not for me. I don't deal well with that type of speed. So, you know, that was definitely interesting. Those taught me though, like, hey, you got to take life seriously, because like I don't want to work here. So like you got to, you know, when you go to college, you got to figure your shit out, and you got to figure out how you can go work in a environment that you want to work at. You know, GE was good. I think when I first started, I remember like thinking to myself like, okay, so I'm going to join as like an analyst, and I'm going to be like advising the CFO on how to make investment decisions. Like, how do I know how to do that? And then my first day, you know, I realized like, oh no, you're just in Excel all day, and like, you know, doing these like data entry and improving these Excel processes and data gathering and stuff like that. But really GE did teach me kind of like how to grow up, you know, how to be an adult, how to, you know, communicate with all different levels of an organization, whether it's, you know, entry level, mid-level managers, and then as I went on, executives, CEOs, boards, things like that. So that was like a really, really good experience that I had early on to understand how do you really operate at a very high level, understand details of things, anticipate questions, discuss things with people that are like, you know, on like a world leader type level. So that was, a really good experience, as well as be the person, like at some point, like be the person who's making decisions for people that are like 30 to 40 years older than you. Like, why should they respect your opinion? So that was really good. Going to Facebook, I remember when I went to go interview, I went on the campus and I was like, I told my wife, like, this is the Disney World for adults, I think. Because I remember walking in and like, there's all these people that look like they're 20 years old, like eating ice cream. And I was like,
with
where
a personal
am I?
massager just walking behind them wherever they go. Yes.
Yeah, exactly. So, that was good. That was a high pressure environment. I would say it was probably a more open culture where, at GE, where for most people, really at GE, you needed to like, go through certain bureaucratic steps to like talk to someone. Maybe at Facebook, it was like, oh no, like the GM of this business or whatever sits like 3 desks down for me, so I can just go talk to them. Mm-hmm. But it was still very kind of like a professional organization. They moved really fast. It was like some of the smartest people I've ever met. And then now at JT Capital, it was just like, when we first started, it was like, we just have to make this thing work. I did the fear setting exercise by Tim Ferriss. So that I think helped really prepare me. It was
just imagining worst case scenarios and how you might mitigate them.
Yeah. It's like, yeah, exactly. Yep. Anyone who's thinking about, who's listening, who's thinking about taking the leap or doing their own thing or something like that, do that. Or making a major life decision, do that exercise, because that is super impactful. And yeah, it's just like a different kind of pressure now, right? Like now your name is on the line. You're responsible for people's money. You're responsible for your own money in a way that you haven't been before. You don't get a paycheck every 2 weeks. It's not how it works. So it's just been the work is so much different. Like at Facebook, at GE, whatever, you're executing, you're in the details of, doing the work product and doing things, versus now it's so much more like, hey, one decision or one action that you take for the year will have much more of an impact on everything else that you do in the year. Like if I look at, the past few years, like 2 decisions I make each year are the ones that justify whether you're going to, have a really good year or not a great year. And so that's pretty much, what I take away from kind of each type of job.
That's very interesting. Okay, a few closing questions for you, just 2 here. And one is you've segued into beautifully. What was the single biggest inflection point of your career?
So when I was at Facebook, and there was a couple things that happened that ultimately made me want to go start my own thing, but we had to put this financial model together, right? And we had put it together one year, and we put it together in this way to show like the impact of what something would be. And that's what we did the previous year. This year I was like, hey, I found a quicker way to do it. And like, it's pretty much it gets us to like the same type of answer. And, the logic is different, but we're getting there. And so I did that. And, my boss at the time was like, I explained it to him, walked him through it. And he was like, yeah, that's great and everything, but like, we should just go do it back like the way we did before. And I was like, yeah, but like, I did that high level of the way we did before, and I'm telling you, like, it's the same answer. And he's like, and so, we're going back and forth for a little bit. And then he's like, okay, look, like, are you just going to do it? And I was like, oh God. I was like, I really don't have a choice. I have to do this. And I remember we were like in a meeting, small meeting room. I remember walking back to my desk and being like, okay, fuck this. I'm out. Like, I'm not doing this. I got to go do my own thing. And so that was probably the largest inflection point of my career, where I was like, that along with like seeing Facebook rank #1 in HR, or number 1 on Glassdoor for places to work. I was like, okay, like, is this #1? Like, where I can't work anywhere.
It's as good
else.
as it gets. Yeah.
Yeah. But that was probably the biggest inflection point, where I was like, okay, I gotta go do my own thing, and I need to figure out what that is.
Interesting. Was there a single, any single deal that like JT Capital hinged on, or that sort of enabled you to go and do your own thing? or was that opportunity really set up by, these years of sort of like being diligent about saving and giving yourself cushion and working and learning, where you had a really longer period of time to make your own thing work?
Yeah, I think it was over a longer period of time. Like, it was the saving money. It was, getting comfortable with kind of having enough cushion. My wife worked, right? So, like, at least with her job, we could pay all our expenses, right? Mm-hmm. So without her, I couldn't have done any of this because I would have had that cushion. But I don't know if I would have taken the leap not knowing at that time that, like, money's not coming in every week. Like, now I'm totally comfortable with that because it's been happening for so long, and, you just adjust to, like, okay, this is the way life works. You get paid on mostly like carry, right? Carried interest from these deals. And that's fine. But, at that time, I don't know if my wife was not working, if that I would have taken that leap. So it was really just kind of, saving over time and being diligent about it.
Interesting. Okay. Last question. Take your time. What is the mental model or heuristic that you use most frequently? And multiple is also an interesting thing, but like the rules for decision making or the rules of thumb that you reference most often, personally or professionally.
Yeah, I think there's two. Let me make sure I'm not missing one.
I mean, I'm sure some people could answer this like 97 things. So
Right.
For some people, there's one really clear thing. But I always think this is an interesting question.
Yeah, I think there's three. So I think about it like this. And this is a lens for like all decisions, probably relative to business, like life, so on and so forth. So the first is simplicity. So, whenever I hear of an idea or someone doing something, once like a lot of buzzwords start entering the conversation and a lot of complexity of like, we need to do this, and then if we get this right, it's going to lead to this, and then, if we get that one right, then we're going to hit here. It's like, all right, we're creating like a web of just like complexity here. Like, can we even get to the first thing? Because if so, like, I don't know if I want to be a part of this. So I think simplicity, where, that's one of the reasons I chose real estate, which is like, you buy a building, people rent, they pay rent, and you get cash flow. Like, okay, super simple. Even with like any other like I've really been interested in software recently. Even like these software businesses, which is like, hey, this is just like a huge problem in a specific type of vertical. We're just going to go solve this one problem. Okay, great. That makes total sense to me. Like, super easy to get customers on that, so on and so forth. So I think simplicity is one. The other one is compounding. So if you could tell me that, hey, we're going to start a business this year and it's going to make $2 million, but after that, like, it's done. Like, nothing else will come from that, right? Like, we're going to sell masks during COVID. We'll make $2 million. I probably would not be interested in that, because there's no type of compounding effect or no equity value or no enterprise value that can be created. And that one, has come over time, where in the beginning of starting a business or before starting the business, it's just like, hey, I just need to make money and make cash flow. But then over time, you realize like, that's fine, that's good, but what you need to be focusing on is increasing the enterprise value of your business, which is, what is the revenue you're generating? How sustainable is that revenue? What are the unit economics of the business? And what is the total value of this company, such that, you could potentially sell this thing and, get an exit based on a multiple of the cash flows that it's generating. And something that, has a flywheel effect. So it continues to get stronger and better over time. That's what I'm, most interested in when it comes to doing things, compounding as it relates to relationships, right? All I have to do is spend lots of quality time with my daughter and just be there for her, and we're going to have an amazing time. But like, those relationships compound, over the course of her life and my life, my wife's life. And then lastly, it's return on hassle. So whenever I do something, what is the amount of like, work that I need to do to go get this thing? Again, like, if you told me that, hey, we can make $10 million this year, but we're working 7 days a week. For a year, you can't really see your family. Maybe you can see them for like dinner, like a couple times a week or something like that. Besides that, like we're going all in and we're going to make $10 million. I'd be like, yeah, not interesting to me, because like we're going to have to put in so much work and effort. I can't do the things that matter most to me. That's like a lot of hassle and a lot of just unnecessary burden that I don't want. So I think those are the three mental models that probably I use on a day-to-day basis: evaluating opportunities, thinking about how I'm spending my time, thinking about the relationships that I have and stuff like that.
It's awesome. Simplicity, compounding, return on hassle. Sounds like the recipe for a very, very good life. I appreciate you sharing those with us and taking the time. And it's great to talk more. I 40 seconds into hanging with you at Capital Camp, I was like, oh yes. We have a lot to get into. I have a lot to learn from this dude. I thought I knew it'd be fun to have you on here, and I'd learn a lot doing it. So, thank you for taking the time. I really appreciate it.
Yeah, man. Thanks so much for having me. For having me, I'm a big fan of your podcast. I love the book you've written, and I'm looking forward to everything that you're going to keep writing and doing in the future.
Thanks. I hope it lives up. I hope it helps you accumulate even more Austin real estate.
Yes.
And I come up with some money to put into it. It seems so obvious, 10 years ago what Austin was going to become. And I'm glad you're in the right place at the right time with a big catcher's mitt to get some of that growth. It's an exciting frontier.
Yeah. Austin is great. The growth has been crazy.
Yeah, right place, man. You're in the right place.
All right, good stuff.